Hello everyone, Scott Myers here, and this podcast is sponsored by the Self Storage Academy, which is being held live in Phoenix, Arizona, November 4th through the 6th, and I absolutely want you to be there. Listen, there has never been a better time to invest in self-storage, and there is no better team than ours to show you how to do it, because we wrote the book on how to invest in self-storage. Literally, I created the best-selling home study system back in 2007 titled How to Find, Evaluate, Purchase, and Manage Self-Storage Facilities, and since then, we have helped thousands of people launch and scale their self-storage business. We have now become the nation's go-to resource for all things self-storage. And that's because we not only talk the talk, but we walk the walk. Day in and day out since 2005, amassing 2.4 million square feet of self-storage, totaling over 14,000 doors nationwide. So if you're ready to launch or explode your self-storage business, then go to selfstorageinvesting.com, click on the events tab to grab your ticket to the upcoming Self-Storage Academy in Phoenix, November 4th through the 6th, along with tickets to our virtual academy for those who can't make it or just aren't ready to go live at this time. That's selfstorageinvesting.com, click on the events tab, but do it now. Seating is limited, and we have sold out every academy since 2008, with the exception of one, so go and do it now. And on behalf of my team, we look forward to seeing you in the Valley of the Sun, November 4th through the 6th. Take care. This is the Self Storage Podcast, where we share the knowledge and skills from the industry's leading investors, developers, and operators to help you launch and grow your self-storage business. I'm your host, Scott Myers, and over the past 16 years, we have acquired, developed, converted, and syndicated over 2 million square feet of self-storage nationwide with the help of my incredible team at selfstorageinvesting.com, who has helped thousands of people achieve greatness in self-storage. Hello, everyone, and welcome back to the Self Storage Podcast. I'm your host, Scott Myers, and this week's guest is my good friend, James Hawk. Now, James has been investing in real estate since 2010 and has bought and sold over $90 million in residential and commercial real estate, and he also owns and operates an extremely successful real estate brokerage firm in Florida. His superpowers, however, are his marketing strategies and systems that have enabled him to purchase over 1,000 properties in just a few short years. Now, James and I are members of a mastermind, and I have been able to watch how he has scaled his real estate business over the past several years, and he and his team are masters at creating standard operating procedures to train the rest of the team as well as any new hires. And this is a skill set that is crucial for fast-growing companies who make the mistake of not taking the time to document your best practices and then share and train the rest of the team on how to execute them, which is the focus of our conversation. So without further ado, please enjoy my conversation with Mr. James Hawk. Hey, James, welcome to the show.
Thanks, Scott. I appreciate you having me on, man.
Well, it's been a long time coming. We've been chatting at the mastermind and sharing best business practices, what we're doing, catching each other up on what we're doing in the marketplace, and really excited to have you on the show. So I've given the folks a little bit of your background and your bio at the front end of this, but why don't you kind of fill in the gaps from there, as well as letting us know what you're up to now?
Sure. So I had started in 2010, so we were on the upward trajectory there from the last crash. I wasn't a part of that, and I partnered up with my business partner now, Hunter Hayden, in 2013. Quick funny story: we met on Craigslist, not in a weird way. All right. Back then you're always posting deals and stuff like that. We do a lot of wholesaling. So that's how we met each other. And then we ended up partnering up on a flip. And we've been building the business together, all the businesses together since 2013. And now today, we still do a lot of, wholesaling across the United States. We do fix and flips, new construction, and we do have some holdings, not at the scale you're at. But some bigger stuff, right? Some commercial properties as well.
Mm-hmm. So tell us a little bit about what the focus has been recently. I know you've been going gangbusters on the housing side. Is that where you're doubling down? Are you looking into more commercial? I know you were diversifying into a couple other, well, I don't even know if it's an asset class. It's maybe a couple of one-off properties that you're looking at down in Florida. Tell us, some of the other diverse types of properties that you're investing in.
Sure. We just bought a 20,000 square foot light industrial property in one of the historic areas of Jacksonville, Florida. Prime property. Then we also bought, interestingly enough, a used appliance store. The reason that we bought that is obviously nothing to do with being in the used appliance business. I have no interest in that, but it is a prime piece of property at an extremely busy intersection that we just got such a smoking deal on it, and we're going to tear it down and we're going to build something new. We're even thinking about maybe trying to lease to a dispensary is really what we're looking for.
Mm-hmm. All right. Well, the other one that I was trying to pull out of you, James, is that you also bought a haunted house. Is that right?
Yeah, we did. It is still technically a commercial property as well.
Mm-hmm.
It's in downtown St. Augustine. It's it's really a restaurant, but what we're going to do there is we're working on doing a commercial lease with a restaurant now for right around like $12,000 a month. And with that, we only paid 325, and these properties are highly desirable. They're very difficult to come across. They're usually passed down through the family,
Mm-hmm.
right? But it's on the ghost tours. It's notoriously one of the most haunted houses in St. Augustine, which is the oldest city in the country.
Mm-hmm.
Not everyone understands that, but then we're going to do Airbnb upstairs. So we think we'll be able to do a cash out, right around close to $1 million on that
Mm-hmm.
property, and we'll have about 100 into the renovations. So not a huge property, but I mean it's a good deal.
Mm-hmm. So fair to say you're pretty opportunistic in your approach and search for properties that you understand the market, you know what it looks like on the housing side, and for that you're basically doing that across the country. But industrial, anything commercial, you got your finger on the pulse. Is that you? Is that your partner? Do you have your acquisition managers or other feelers out there for referrals? Tell us about your deal flow and your funnel and what that looks like.
Sure. So Hunter, my business partner, he primarily focuses on the bigger assets for the most part. I mean, we're looking for stuff that's a little bit more unique. I mean, I'm really interested in storage as
Mm-hmm.
well, right? So when we find a unique opportunity that we can add a lot of value that we think is going to be profitable, we'll move forward on that. We're really not interested in building out the large portfolios of like your cookie cutter single family rental properties. That seems like it's a lot more hassle than it needs to be for us. So, like the light industrial stuff, right? It's similar to storage. Like once it's there, you're just cleaning it out. They can come in and build it out, your tenants. So the maintenance is nowhere near as crazy. And you're condensed, right? You're not just all over the place, which I love as well. We try to stay fairly centralized and, the bigger assets that we're looking at.
Mm-hmm. So how does that change your approach as we hit into the balance of this year? One of the big discussions or multiple discussions that are being had is, what this administration's approach to real estate, and some of the things that we have heard about or are already seeing coming down the pike for investors. Regardless of whether you're flipping or you're a buy and hold or you're syndicating, how has that affected your business? It sounds like you're a little more nimble with the different asset classes, but how has that changed, or are you pivoting as we head into the balance of 2021 and then into 2022?
Well, we try to stay very agile, right? So like we pay attention to what's going on, and as the market is shifting, we just try to stay ahead of it and adapt, and formulate that to what works for our business and our approach. So I mean, personally, with the bigger concern that we have right now, or I shouldn't say concern, but that we're paying the closest attention to, is what's going to happen with all the forbearances and the foreclosures
Mm-hmm.
and everything like that, because that obviously creates opportunity across the board
Mm-hmm.
for many reasons. And what I think will make this interesting, and this is kind of like what we're kind of on edge to pivot one way or the other, depending on which way it goes, is will all these really be released into the market and
Mm-hmm.
affect the market? I remember back when I got started, it was very common that tapes of like REOs, were being purchased directly from from the banks, right, from the lenders. So will we see that influx of inventory hit the market, or will the institutional buyers just start buying them directly from the bank, and will it have that much of an impact at all? So
Mm-hmm.
those are some of the things that we're really paying close attention to, because that'll dictate a lot of what it looks like going into 2022. I think, and not even just the residential, but the commercial as well.
Mm-hmm. Mm-hmm. So if you're planning to take advantage of that, I'm assuming you've got some equity partners identified, or are you working with lenders? Tell me what your
Absolutely.
capital looks like and how you're prepared if and when they all hit the market and you have the ability to take them down.
Yes. So that's really the focus has been through this year, is
Mm-hmm.
consistently building new money relationships, raising more money,
Mm-hmm.
building cash, right? So we haven't been on a buying frenzy. Like, I mean, we both have many friends that are, strong believers in going out there and building, large single family portfolios. And look, I'm not saying that there's anything wrong with that. It's just not really for us, right? I don't think this is the best time to be focused on that unless you are getting extremely good deals, whether you're talking residential or commercial. Either way, right? I think both of them are very high right now. And I would rather use this time to prepare for something that is impending. It's something has to happen. We don't have the crystal ball, but we know we're beyond, right? Historically in the cycle where something should have happened. So it's inevitable. It is coming. And I would rather prepare more for that, where we can actually get better deals potentially than what they are now.
Mhm. And that's, that is the gong that we have been ringing over and over again on this podcast, is that, we've been preparing for 3 years for the downturn, the next recession to happen. And although the marketplace acted like a recession in many, many instances, in many ways, last year in 2020, when the pandemic hit, and self-storage benefited. And, we normally do in a recession when bad times come about in the marketplace, and in the economy, people downsize, businesses downsize, and self-storage benefits from that. So what we've seen then, this time around, which is different, is that the cost of capital obviously is a little bit lower, and so the valuations for self-storage has been high. And so anything that we can sell, we're certainly looking at. But in the meantime, yeah, stockpiling cash, creating more relationships and deepening those relationships with funds, creating our own fund, as well as keeping our lenders happy, so that, yeah, we don't like to buy at the top. We certainly like to sell at the top, and we don't like to buy at the top. And so we're doing our best to stockpile. And we know that, at least on the acquisition side, that better days are ahead for us. And so we're just really kind of cleaning up things in terms of balance sheet, back office, and getting prepared for a time when we are going to be able to ramp things up. So is that somewhere along the lines of what you're looking at?
Absolutely. I totally agree with that. I think it's very important that this year you've been preparing for 3 years. Like that has been our focus going through probably about the last year and a half, actually. Because something will happen. Right now prices are sky high. It's a great time to sell. Right? It's a great time if you have something to sell.
So what else from a staffing standpoint? I know there's lots of areas in our business that we're looking for in anticipation of, again, taking advantage of the gift that the market's going to be giving us here in the future. But what are you doing as far as staff? I know we're making some key hires, getting people in place, but we're holding back on others. What have you done on with your level of activity? How are you approaching staffing the organization in preparation for what's coming?
Yeah, so what we've been doing is we brought on a COO, and we've really built out a solid management structure. So some of the other positions that I never really hear a lot about, in our masterminds and stuff like that, like we create a quality assurance manager. You really don't see that a lot in the real estate investing space, but for at least like more on the transactional side, right? Um, so we brought that person on, specifically for just training and really keeping all the processes tight, right? Finding the holes so we can plug them, looking for trends and patterns of, how we can be more efficient. How can we maximize profits more? So we brought on, HR, like the whole deal. And we're building out, and we've been doing this now for the last few years, and it's been a consistent work in progress, a full site of, detailed training, flow charts, videos for every different position within the organization. And that's for all the way through project management and everything else, because we do a lot of flips. We're also ramping up on, the brokerage side, too. So really just making sure that our structure is tight, that our processes are efficient. And that way, when this does happen, between that and, all the capital that we'll have available at that point, that we'll be able to deploy into the market, we're going to be set up to capitalize in a big way. So that's why we've been strategically working on that.
Mhm. You know, Anybody will tell you this fill in the blank is the secret to being successful in real estate. And you know, depending upon the time that we're in, you know, you could fill it in with a dozen different you know, words. But I think for us right now, it's speed. Speed is the key. And you know, the more time that we spend just monkeying around, even just trying to find things, whether it be, you know, in Dropbox or SharePoint or whatever you're using, or really with not having the right procedure or knowing whose responsibility it is, and having a person trained and up to speed, you know, all of that just costs us so much money and sometimes costs us deals. And I'm recognizing that now after being in real estate since 1993, that I think maybe it's because we've got so many other things dialed in right now that all we need to do is just add gas to
Yeah.
the fire, and we can't go fast enough. And when we can't go fast enough, the CEO gets a little impatient. So, you know, we in our mastermind, if we go back to that, you know, one of the challenges that I had is getting people up to speed, and how, you know, we document these standard operating procedures. And who in the heck has time, if we're trying to move fast, who has time to document these standard operating procedures, you know, so that we can train somebody right away, and that also they can say, hey, it's, you know, we did a standard operating procedure, it's written, it's located right here. So filing it and making sure that it is created and in place. Until somebody mentioned, they said, well, you know, we just create a video, you know, just create a loom, and you know, here's the process, and as it changes, you tear down the old one, and you insert the new one, with any other changes that need to be made. And so we continue to, you know, we used to just beat ourselves up because we had to have more time to get all this done, only to find out that if we just shoot a quick video, but then we label it correctly and then put it in the right place, that is an even better trainer than somebody reading through a PDF or any other or document. And so
Faster as
all,
well.
absolutely. And we can do that on the fly, especially when it's fresh in your head, because then if you try to go back to it to create a PDF when you have time, it just doesn't happen. So I guess share a little bit about, you know, what you've done on that side from a standard operating procedures standpoint, and the staff that you're, you know, bringing in and gearing up. What does that look like in your organization?
Yes. So when we brought on the quality assurance manager, so we had already had the structure in place, right, for the site, but it was, you know, becoming outdated. It wasn't nearly as robust, and I see this as such a valuable asset, you know, moving forward as you're progressing, as you're trying to grow and scale. You know, this could be an incredible tool that allows you to do that and frees up more of your time as well, right? As like the leader of the company. So that COO and our quality assurance manager are always working together to, you know, track all the processes and progress of what all the other people on the team, right? And what that looks like. Where were we inefficient on this? So we have like a Slack channel build out, right? That's always being monitored. And if something happens that, you know, didn't go well, or something was missed or anything like that, then it goes in there, and then everyone is notified. All right, so this is here was the issue. Here's how we're going to resolve it. So now everyone is on the same page, and it gets, you know, imported, whether it's a video along with the actual written out procedure from me, or most of the time it's from them. If it's something that I feel like, all right, I should address this, then I'll step in and do the video and, you know, the procedure and everything myself. Or I'll do the video, and then they'll write out the procedure from the video for me, and then they'll implement everything in there, and then everyone is on the same page with that clarity, because that's important too, right? I think that a lot of people miss that point, which is very critical, is everyone needs clarity, and they're
Mm-hmm.
moving in the same direction. Everyone's on the same page and understanding, hey, here was a process change, right? Because that's how things ended up being broken, right? Is if you're
Mm-hmm.
not paying attention to that, and then someone isn't aware of it on the team, they go out and do that same thing again because they weren't aware, right? So it's not even just putting everything in there, it's like bringing that awareness across the board.
Mm-hmm. So tell me, what does training then look like if we're doing things on the fly, whether it be standard operating procedures or any policy change? You know, do you have you know, a formal rhythm or a cadence to, you know, just ongoing training with existing staff? Tell us what that looks like.
Sure. So when we onboard, we do a quick start onboard, right? So I like to make it more, I treat real estate more as a product. And I think that's how you could start getting into the volume, right? Is if you make it just real estate, at least on the single family level, right? The residential, it's much more difficult because there's so much in-depth training, right? That has to go into that. And as far as like salespeople, using them as an example, when you're a really, really strong closer, you might not have all this real estate information from the beginning, right? Without all that experience. So we slowly drip that into the training with them. I'll do in person, like one-on-one trainings with all the ones that are actually local, and then we have a lot that are virtual as well. And I try to keep them going on a weekly basis, where I'll do at least individual training with everyone. When they initially come on, they go through like a deep dive quick start training that is laid out strategically day by day over the course of a week. That's like, all right, so we're going to do this, we're going to do that, we're going to show you how all systems, processes work, and everything else. Here are all the most important things that you need to know, right? And then once that happens, then they're off to the races, and then the sales manager is going to watch them on a daily basis. We're going to do kickoff calls, and then they're going to do individual trainings with me, along with I'm always keeping like updating, like if I find something or I'm like, hey, I'm hearing this all the time and I get a lot of feedback on that, then I'll go in there and address that if it's something that's not already in there. And I try to keep everything updated as well from my side, because we're in an ever-changing market, right? Very, to your point, very fast-paced. Stuff changes all the time and we have to stay on top of it. So I definitely am involved in keeping that that moving.
Mm-hmm. So what is James, what is your ultimate role then in your organization? I know you guys are obviously moving fast. You're being opportunistic, looking at different areas. How is that evolving your role in the organization? It sounds like with the COO in place, you're able to kind of step back and maybe focus in a different area now. So tell us a little bit more about where your new focus is.
Yeah, so I definitely am a visionary, right? So that's 100% a visionary. But I do still have, 10, 20%, involved in the operation side. And it's really just overseeing, right? So I'm never going to completely take my finger off the pulse, because I always want to know like what's going on, because we want to grow and we want to scale. So, the updated role, right, is I do enjoy, helping more people get into the business and everything else. I've done some of that already in the past. I will be doing more of that in the future. In addition to working with my business partner, Hunter, which is an incredible, incredible guy. I couldn't do it without him. So, us working together on, moving into, the bigger asset classes and, building a portfolio around that. Even self-storage, we're very interested in as well. So raising more money, and buying more great assets at at good deals, right? So that's our focus.
So you're selling some of your properties and or portfolios or groups of properties off to funds. Is that correct? The bigger players?
Yes.
Okay. So is part of the reason behind it, making sure that this focus on the back office and making sure that everything is in order. How has that helped to position you better or tell your story a little bit better when it comes to working with the funds? Has that been a benefit?
Yes, it certainly has been a benefit. And we have a unique opportunity right now. So everyone on our entire team, again, going back to the clarity and the vision, we make them aware this is probably not going to be forever, right? So we have an opportunity right now where we can go out and we can purchase properties that we would never be able to purchase at prices that we wouldn't even consider, at this moment, and still make huge spreads on these properties, selling directly to funds. So we really have focused a lot of this year on building a lot of fun relationships. And that way we can do, dispo becomes very easy as well, right? Now, with that being said, we're still doing a lot of the traditional properties, and we're still, doing a lot of our own internal renovations and new construction and stuff along
Mhm.
those lines. But through those relationships, you can turn a deal that's not a deal into a deal, right? So that's very
Yeah.
powerful, and that will not last forever.
Yeah. Yeah, and that is the I guess the mantra around here within our own mastermind, and also with our acquisition folks is, the low hanging fruit is gone right now. It just, I mean, we're looking under a lot of rocks to find them. It's not completely gone, but at the end of the day, you don't typically find a deal anyways. It doesn't just find you. You create deals, and so that's what we've and that is where I step in. Part of my role is saying, okay, well, here's the parameters that we're going to look at. And they may not have been as sweet as in the past, but now, okay, where can we take this thing, and where can we take this property, and what can we turn it up to, and using the exit points that we have in this market right now, which, as you mentioned, are they're a little high. So the properties that, yeah, we wouldn't have bought 3, 4, 5 years ago, we knew that we wouldn't have been able to get enough yield, create enough value in these to exit, at a marketable interest rate and a cap rate. But right now, that's we've basically just wiped this, the slate clean and started over and saying, okay, well, here's now the new threshold, and even though we wouldn't have liked it before, here's where they're trading. And so the numbers have changed a little bit. Now go out and find the ways to create value so that we can exit at this price, and we've been very successful in being able to do so, and buying some for a midterm hold, if you will, but something that we can turn around, and once it's create some value in it fairly quickly, and still exit where we feel it's going to make sense in a short time frame before interest rates change and our cap rates change on us right now. So it is out there, but to your point, we are in a different position right now, where the long-term hold is maybe not the best play, but to wholesale and or to flip in this crazy market that we're in right now.
Yeah, and what you said earlier rings true. I think throughout the industry overall, on being able to create
Mm-hmm.
opportunities, right? And we really focus heavy on the value propositions, which has always been a big like core value throughout our companies.
Mm-hmm.
But now you really have to even become more creative,
Mm-hmm.
because there is a ton of people out there that you're competing against, right? And in the single family space, you're competing against the funds as well, right? So
Mm-hmm.
what's the best way to treat competition? Like, work with them,
Yeah,
right?
that's
So
right.
that's the
Mm-hmm.
approach that
Mm-hmm.
we took, and we just get very, very creative with a lot of the sellers, and try to solve problems that nobody else might not, just wouldn't want to deal with, even in this market.
Mm-hmm.
And that requires a whole nother skill set right there in
Mm-hmm.
the team to be able to accomplish that.
Mm-hmm. Well, James, as we wind down here, just appreciate you being able to share that, and your approach to standard operating procedures and shoring up the back office. And kudos on doing that, so you can focus on doing what you do best, which is being the visionary, and then speaking into and training and making sure you have good lieutenants around you right now. And that is, the e-myth that we all are working towards with Michael Gerber is to get out of the business and work on the business rather than in the business. And it sounds like you've achieved that. So kudos to you.
No, Scott, I very much appreciate you having me on here. It's always a pleasure to speak with you. I mean, look, this show is great. I don't listen to all of them. I try to listen to as many as I can. We are all super busy, and it's crazy out there right now, but I very much appreciate you having me on. Thank you.
Yeah, my pleasure. Well, since you've been listening, then you know what's coming next. Any parting words of wisdom that you want to share with Storage Nation out there with regards to the marketplace, or anything else in general right now?
Yeah, I would just really, like to stress that the market is always changing, and it's always flowing in different directions. So try to look for the unique opportunities, right? Pay attention to current events, what's going on, and try to look in certain places where other people might not be able to see that yet, and get ahead of the curve. That's where a lot of the money will be made, especially as we go into the next big shift.
Mm-hmm.
So just pay close attention to the market and what's going on. Try to find that unique opportunity.
Yeah. Well, in the infamous words of Wayne Gretzky, I skate to where the puck is going, not where it's going to be, instead of following it. So good advice. Well, James, thanks so much for your time, and looking forward to getting back together again soon in our mastermind. So take care, my friend.
Yes, sir. Thank you.
Hey gang, wait, 3 things before you leave. First, don't forget to subscribe to the Self Storage Podcast and turn on your notifications so you never miss another episode. And while you're there, please leave us a 5-star review if you like the show. Second, be sure to share your favorite episodes and more via Instagram, and don't forget to tag us. And lastly, head to the links in the show description and hit the follow and subscribe button on Twitter and Facebook to get a front row seat as we grow and scale our business and bring you along with us. Take care.